Sri Lanka has defaulted over $56 billion. It caused the chaos in Sri Lanka, such as basic items, fuel, food, medicines were shortages. Now Pakistan is facing similar issues. What happens when a country defaults the loan? Are there any countries in the past defaulted the loan? Basically, default means not paying borrowed money installment on time. When a country's government fails to repay its debt to mainly institutions or other countries, it is called sovereign debt default. Let's understand simply what default means. Let's assume you took $100,000 from the bank for 10 years to buy a house. You paid monthly installment for 4 years. On the 5th year, you lost the job and cannot pay anymore. In this case, bank will take house and sell in order to recover money. Now you will have issues to get loan from the banks. This is simple. So what will happen in case of country? A country government fails to repay its debt because of many reasons, such as political instability, banking system issues, high debt burdens, mismanagement, or political corruption, etc. If a country defaults, it may slow economic growth. Foreign and domestic investors will not invest money in the country, high interest rates, and the government will have difficulties borrowing money from overseas investors for years. So defaulting definitely is not good. It has many consequences. Rulers of countries will take various measures to tackle. They can be painful for citizens of the countries. Country will try to restructure the debt, for example, asking longer repayment period. Government may increase tax and reduce spending costs. The country's currency becomes weaker and things such as petrol, medicine, etc. becomes expensive. Due to this, living standard of people will affect. Restriction will be everywhere, such as difficult to take their own money from the bank, stock market may affect, country may lose reputation, which means it will be hard to borrow money in the future. So why do government borrow money? A government borrows money from other countries or institutions, such as the World Bank, because it allows government to spend more on public services and projects than they rise in taxes. If you look the history, it is not uncommon for the countries not to pay loan for other countries or institutions. Even Western countries have been defaulted in the past, such as Greece defaulted debt of €1.6 billion to the IMF in 2015, France in 1958. Spain has many times defaulted. Recently, in 2017, Venezuela defaulted. Even Russia has defaulted in 1998. The list goes on. By the way, there are many institutions that can help for debt restructure or borrow money, such as IMF. Getting weaker currency means export becomes attractive. As exports are cheaper for foreign countries, they tend to buy more from the defaulted countries. In conclusion, defaulting foreign debt does not mean that your country will be captured by other country. However, sovereign debt default put a country in difficult situation. It will definitely affect living standard of its citizens in short term. The default also leads to loss of reputation, which makes it harder for the government to borrow money in the future. However, it is not uncommon for countries to default. Many developed countries have been defaulted in the past and rose again. Thank you for watching this video. If you find this video informative, please subscribe for new informative videos in the future.